Now, corporations record and compute taxable income different than individuals, and then obviously flow through entities, because flow through entities are going to flow through to the individuals, which will then be taxed at marginal tax rates. But corporations compute taxable income by subtracting allowable deductions from gross income. All right, well, that sounds similar to individuals, which includes business revenues, capital gains, and other income sources. Now, tax liability is generally determined at a flat federal corporate income tax rate of 21% of taxable income. That used to be a lot higher. And then we have the Tax Cuts and Jobs Act of 2017. Allowable credits such as the general business credit and foreign tax credit help reduce a corporation's tax liability. Talking about the flat tax rate versus the individual marginal tax rate, it's important to conceptualize and understand. This is something that didn't really click for me for a bit while I was taking tax classes in college, and then once it finally did, I was like, "Wow, this makes sense. Everything makes sense now. Why am I not getting questions wrong as much?" This is very helpful. So, the taxable income of a corporation is determined by taking its gross income, now similar to the items that would be included in an individual's gross income, and deducting the same business expenses that an individual would be allowed to deduct. Both regular corporations and personal service corporations are subject to a flat tax rate of 21% of their taxable income. So we just simple 21% multiplied by the taxable income, just like that's how you calculate sales tax. Lots of taxes are flat rates. Just multiply it by the percent. However, in contrast, the individual income tax system in the US operates on a marginal tax rate structure. This is just another reminder. We saw this in individual income tax, but I would be generally familiar with the individual tax brackets, understand how that works. This means that as an individual's taxable income increases, it's taxed at progressively higher rates. The tax brackets are divided into several ranges of income, with each range being taxed at a different rate. As an individual's income moves into a higher bracket, only the income within that bracket is taxed at the higher rate, while the income in the lower brackets remains taxed at the lower rates. We saw examples of how this worked in individual income tax in those lessons, and I don't believe that I've ever heard anyone have to, let's say, have memorized all of the current year's marginal tax brackets. However, again, like I said, a general familiarity with them and how they work and how you can use them and answer questions with maybe provided ones will be beneficial for you on the exam.
Hey there! Are you ready to not only pass your CPA exams, but truly understand and enjoy the material while studying? I know it seems impossible, right? Especially to enjoy the material? We'll do it together. Tap into the power of cpa.examprep.ai, where we've got personalized quizzes, multiple choice questions, memorization guides, flashcards, simulations, all tailored to your learning. Our adaptive study planning puts you on the fastest path to success and lifts you back up if you fall behind. Avoid wasting your precious time and money attempting an exam with a low chance of passing, because who wants that? We want to get you through this process as quick as possible. Our exam readiness prediction lets you walk in with confidence, knowing that you're prepared for success on exam day. Thankfully, there's no payment method needed to get started, so why don't you come join us? Visit cpa.examprep.ai and let's achieve your exam success together.